When they say Bitcoin is a bubble, and the bubble is just means that the price is higher than it should be, okay? So in this case, you see that the last time we were negative in bubble index, so the interest was negative, or the price was actually underpriced, was back here at the bottom of last bull run. Then we had obviously the bull run, and now where we came down here, even the FTX crash, we had a positive bubble index. Here people were still active in the market, and then here you can see that a lot of people took profits, okay? So that's what crashed the market at that particular time. For me, it was just a retest of that wedge that was created here during a few months. So after the next pump, from that point on, I believe, from here on, I believe that it was the big institutions scooping up Bitcoin, pushing up the price higher until ETF is coming. So if the trend, Google Trends, that people, which shows how much people look for Bitcoin on Google, is basically at an all-time low. At the same time, the price is rising. So for me, these are purely institutions, and let's say the crazy crypto guys as we are accumulating. But this is not retail pushing the price, okay? So it's solely the big guys that push the price. And the moment the ETF comes out, you need to realize that that companies like Grayscale and all these companies that hold a bunch of Bitcoin since years couldn't really dump it on the market legally. Okay, so once the ETF comes out, they can sell some Bitcoin. So now I personally believe they obviously will not dump all the Bitcoin before a bull run, but you can expect some kind of correction when the news comes out. Okay, and this is also the last correction before we go to all-time highs, in my opinion. Okay, so as always, this is not financial advice. I am not a financial advisor. I am just an enthusiast. This is for entertainment. We all are here together and we try to figure out what will happen next. And this is why I am here, and I love doing it. So don't take any advice from me. Don't invest because something I say. And yes, that would be a very bad idea. So it's just to give you a common sense of how I see the markets. I mean, we have all the same chart, but we have all different interpretations of the chart. And I like also to look at, let's say, on-chain data. And this is one of the things I like to see, because I was very surprised the first time I saw this graphic here, because I was like, it's basically when it bottomed out in 2018-19, we had this negative index, and now we are still negative and the price is surging. So this is really, really interesting for me, because I mean, everything can happen. So I can say now, yeah, Bitcoin needs to correct before it breaks all-time highs, but it could do whatever it wants, because people cannot buy market cap. People cannot buy Bitcoin as many as they want. People just can buy liquidity. If there is no liquidity, people need to push the price higher so that new sellers are willing to sell their Bitcoin, okay? So you can always just buy what the other person is selling. So even if there is 21 million Bitcoin, there is surely not even 10 million on the market, okay? There is not, I don't even believe that there is like 15% of the supply on the market in order books, ready to be sold or bought, okay? So this is what moves the price. The market cap doesn't give you, market cap is just a psychological thing, how people look at how high a price can go. But basically, it does not mean for Bitcoin, for example, to go from 1 trillion market cap to 2 trillion. It doesn't need, there's no need to be 1 trillion influx in volume into the Bitcoin blockchain. There is what you need to ask yourself is how many of these Bitcoins are really liquid to buy right now. So let's say the last order is set at all-time highs, okay? And after that, there is no, let's say, sell limits, okay? So no market makers putting their sells at some particular prices. There are, but I mean the most limit orders, short limit orders or sell limit orders are before all-time highs, okay? After all-time highs, we name that price discovery, because basically when there is nothing to buy anymore, when the price is at all-time highs, that means that all the sell limits that were created since we had the bottom were all bought up, okay? And once they are all bought up, there needs to be a new seller for them to buy it up. So this is why they dump prices, they pump prices, and then when there is not enough liquidity anymore because the sellers got squeezed out, then they need to dump the price if they are not willing to buy at these prices. Let's say now you're a big bank and you didn't bought Bitcoin since now. So what is very important is to understand that if they are willing to pay, let's say, 45k for a Bitcoin, then they buy, okay? So they will start buying for hundreds of millions of dollars. So let's say the next big sell orders which match their liquidity influx, which means, let's say they put in 100 million, but combined all the sell orders in the order books of Bitcoin are accumulated from, let's say, 45k to 80k. All these orders together combined make a net sum of, let's say, 100 million. So they would have an average price between 45k and 80k, which would be their average buying price. So if that average buying price is too high for them, they need to give people an idea or the FOMO to sell. Because maybe you are not ready to sell right now at 45k, but maybe you are ready to sell at 80k. If you are ready to sell at 80k, they can buy them up, okay? So once you are starting to sell and people are long leveraging, that means a big correction or retracement will be in front of the door, because this is the liquidity they need, okay? And this is the price they want to buy next. Because imagine you are a hedge fund and you have $1 billion to invest in, but you know if you put in 50 million, you push the price up 5%, let's say. It's not like that, but it's just an example. So every big money you put into the market, you move the price. And to not move the price too much or to buy at an average price, you need to put in money, pump the market, bring in people long leverage, then long squeeze them, take all that liquidity out, bring the price back lower and reaccumulate, and do the same over and over again. So you can basically hold the price stable by at the same time you are accumulating. So if we buy with a few thousand or a few €100,000, it's not moving the markets. But if you have millions and billions of dollars that you want to buy, you need to do it that way, because otherwise your average entry price would be terrible, okay?